Alrighty, I'm going to try to do this quick trade recap with 4% battery on my phone. I did not enter into the market today. As I mentioned in the technical analysis video yesterday night, I don't like to trade holidays. The volume is not great. The market tends to close a little early. It's currently 2:25 in the afternoon Eastern time, and as you can see, market is closed. But I wanted to go over, if I would have taken this trade, what my thought process would have been, just to be consistent about sharing price action techniques and entry and exits on my trades. As I said before, I trade futures. I'm basically an MNQ, MES, but I mainly sit on the MNQ just for consistency. And I like to trade New York, but when I work nights and kind of all over the place. I'll also trade 7 a.m. and I'll trade sometimes Asia session and London session, just depending on if I'm awake enough to do it. So looking at this price action right here, I've got a good London low. That's the lowest price London was at during its session, and the highest London was at its session. London never got as high as Asia session, and I think Asia session, its low was somewhere over here. London did take that out, meaning it became a lower low than Asia and reversed in its own session. So if you were trading during that time, you would have had a good volume return. But because I tend to trade New York, which is my main staple, I like to mark out the 830 and so 830 and 930. So this section right here, I like to look at the pre-market kind of closely and see what market is doing. Now, like that market was coming downward, it obviously didn't come for this key level, but it came downward enough and started reversing. And in its reversal, I don't trade before 9:45 as much as I can. I try not to. But in its reversal, I see where it's aiming for. And you can see it's aiming for this London high. So as it's aiming for this London high, I wait. Because key levels like London high, I wait for a reversal off of key levels. I wait for liquidity. And I see that London high was here, and this is now making a new high. So I expect a reversal down from this key level, which we get. How do you know there's going to be a reversal? For one, if we're using price action, we can see that price kind of consolidates here. So you can have a bull flag where it's going up, it consolidates, and then it goes up again, or it consolidates and starts to go downward. So for me, I look for a nice significant blue going up and then an even significant black going down, and then I mark that as kind of my order block and I monitor that. So I saw that here, and so I'm going to mark that. And I'm going to draw that out. All right, so let me use this. So if I see this blue here and this dark black right next to it a lot longer, I'm going to wait for a candle to enter back into this space and show me that it wants to keep going down. So this is a good black candle that enters in, but it closes above this yellow line in between. So when I see the next black candle close underneath it, I'm probably going to enter into this trade. Again, this would be more cautionary of me because this is a holiday and I don't trade holidays. But if I were to trade this holiday, I would have entered in on this candle 10:03, or I would have entered on this candle 10:04. Also keeping in mind that 10 o'clock is another micro time to look for trades. So this would have been the right time for me. Again, I would have used this order block. I would have waited for price to kind of be beneath this yellow mark, and I would have entered. Where would you have taken your exits? Because entry is just as important as exits. I would have taken my exit right here. Right here. This would have been my focus exit. Why? Because this exit and this, or rather this swing low and this swing low, are almost making what we call relatively equal lows. Almost. I think if I scroll over, let me see if there are other ones down this way. No, but either way, I would have aimed for this, just keeping a close eye on that. That would have been my aim. I would have entered in with 10 MNQ contracts, 10 to 12 MAQ contracts in this spot here. And when I reached down here, I would have gotten out with like at least, I don't know, I've gotten out with either 5 or 8. Based on the way the volume is moving here and the way the black candles look, I probably would have gotten out with at least 8, just knowing myself. And then I would have waited for this full black candle to close. Once it closed and I see that it closed black, then I would have moved my stop loss to just above it and waited for price to keep going down. And I ultimately would have taken I would have taken another partial right here. So if I took out 5 over here, I would have taken out, so 5 and 12 is 7. I've taken out maybe like another 5 over here and left 2 down, and I would have put my stop loss here. So my first stop loss would have been at this height. Second stop loss, I put my stop loss wherever my partials were taken out, so I have a net even and I don't lose anything. And that would have been my trade. I wouldn't have gone in again. Even with this reversal, I wouldn't have cared. I would have come back up here and I would have said, okay, let's see what 11:30 wants to do. But I also know that market's going to close, so I don't like to trade 1 to 2 hours before market closes because you can't trust the volume making any sense. But yeah, this is what I would have done if I were trading holidays. I try not to trade them again. Volume is not great. The banks are not open, so it makes no sense why we're even trading. But if you're the kind of person who wants to trade, that's the technique that I would have used to enter.